Hello, everyone. My name is Matthew Frailey, founder of BreakpointTrades.com. Founded it back in 2003, 21 years ago, to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading systems like you see here with our mean reversion systems. By the way, our mean reversion systems just closed out some awesome trades for our subscribers. I'm going to discuss those in depth in my newsletter video, but here's an example of some of our mean reversion systems that just took some really nice trades and closing out excellent profits here. Here's some of the gains on these mean reversion systems for SPY, SSO ETF, and of course MES futures. Pretty awesome gains here. Anyway, again, we'll discuss those in a bit. As I stated, I'm Matthew Frailey, founder of BreakpointTrades.com. By the way, another side note, our KISS systems, which have been a very popular new addition to the website over the last year, they're opposite the mean reversion. They're trend following. So we have systems that do both sides of the market. Trending moves and of course consolidations, mean reversion. So you can see, for example, Mara system went long just a few days ago last week on April 19th. That trade's already up 15%. And if you look at the chart, you'll see that entry right here. Nice entry, set its initial stop at the lows, moved to stop up today to 1530. You can see the last couple trades were nice winners as well. Okay, enough of that. Let's get back to this video at hand. It is Tuesday, April 23rd, and this is our backend recorder for our website format for our subscribers. If you're on YouTube, you should consider getting a subscription to Breakpoint Trades. That's the way to help us out. A lot of folks out there have Patreon, stuff like that. But honestly, if you want to help us, the best thing would be to subscribe to our service. So let me go ahead and get this recording started right now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Tuesday, April 23rd newsletter. Tonight's newsletter, as you can see, divided into 7 major table of contents. First off, we're going to, after my opening comments here, we're going to discuss the mechanical systems, specifically the mean reversion systems. They kicked ass this time, closed out some amazing trades. We'll go over that in a minute. Then we're going to jump to the general market analysis. Again, we're going to look at the major indexes, the S&P 500, the Dow Jones, Triple Qs, IWM. We're also going to look at some upcoming big cap tech stocks that have earnings. We have quite a few of these. As you know, we are in the middle of earnings season now. Tesla reported earnings today. It's up after hours nicely. It was very oversold already, so not surprised to see that. You have Meta reporting tomorrow, Google and Microsoft Thursday. So those are going to be potential market movers. And after the market analysis, we're going to look at some of our custom indicators. We'll also look at the bonds. We'll review some of the sectors. We'll look at the US dollar, Bitcoin and crypto stocks, commodities, precious metals, GDX, and we're going to follow up with trade setups. As far as the market on the weekend, my weekend extensive newsletter and video, I discussed how the market was quite oversold and due for some sort of mean reversion bounce rally. Again, multiple reasons. Number one, quite a few of these mean reversion systems were taking trades, scaling into the pullback. And whenever you get quite a few of those scaling in, even 2 and 3 entries, the market rubber bands usually stretched and you're ready for some sort of mean reversion bounce. We also had some divergences on various indicators and indicators that were quite oversold. So not surprising. So pretty nice bounce this week. S&P up 1.2% today. It's up 2% for the week. The NASDAQ up 2.7% for the week already. Next. Let's go ahead and discuss these mean reversion systems. So the mean reversion systems on the website, we have roughly 21, 22 of these mean reversion trading systems, algorithms. Here's the various names to them. They're all their own system, mutually exclusive to one another. The reason I have so many different systems is because that gives the most trade opportunities. There's a lot of folks out there who just have 1 or 2 systems, like a Larry Connor's RSI2. Well, those are good systems, but you don't get that many trades. So this gives us the chance to get as many trades as possible. Most of these systems have 80 to 90% winning trades. So the systems, again, you're never going to see examples where all these systems take trades, okay? So recently on that pullback correction in the market, we had essentially um, three systems that took trades: the trend pullback, the QEBTS, and the CCI divergence. I forgot to put an arrow there. So those three went long over the last week on the market pullback, last couple weeks. And before that, we had an exhaustion short that was honestly, that was a few weeks ago. That was actually a pretty good warning sign that the market was going to pull back and have a correction, because that's a very tough system to trigger short. Let's take a look at these. So image number 3, here's these mean reversion systems. And what I do with those 21, 22 mean reversion systems, I run them across the SPY ETF and across ES futures. Now, not everyone trades futures. Futures are not for everyone. There are tax benefits to futures, though. If you don't know, there's the 60-40 tax rule for futures, where 60% of your gains are, you can treat those as long-term capital gains. And the 40% of your gains are short-term. That's big. That's why rich people typically will trade futures instead of SPY, because of the great tax benefit. If you're trading a lot of money, it really matters. You know, you could hold a futures contract and sell it in 1 minute and still get to claim 60% of that as long-term cap gains. Whereas a stock or ETF, you got to hold it for a year or more. Anyway, so here's the systems that went long on SPY and ES. There's the CCI divergence, the upper left. You can see it had 2 entries. Price did go a little bit lower, but it closed out a nice winning trade on both of those entries. Here's the trend pullback there in the middle. You could see a few weeks ago, the system did a trade, got out, which was good because then the market sold off and the system scaled back in. 2 entries, got out today. Nice winning trade. This one here, the QEBTS, is actually exiting tomorrow morning on the open. Okay, it gets its exit signal the previous day. It's already decided, so it's exiting tomorrow. Yet another winning trade, unless we have a big gap down overnight, which I don't see. On the bottom here for the ES futures, again, we had the trend pullback. On ES, there was actually 3 entries here. Nice exit. The QEBTS, or QE, this one is still holding. And the CCI oversold logic on ES also closed out. And this one had a better entry than SPY. That's actually a great example of, you know, why do people, I get the question, why do you run it on both SPY and ES? Aren't they essentially the same thing? Yes and no. You know, ES trades overnight, 23 hours a day, except for the weekend. So you get some different price movements. Price is different. But also, just running the same system, you can see, you'll get differences in trades. You can see here on SPY, you know, it made money here, but price went lower, whereas on ES, it entered later. So it actually had better entries and had, you know, so that's an example of running the same system on 2 different instruments, giving you slightly different results. You never know which one's going to be best. That's why I throw both of them on here. Next. Image number 4. So here's the trade statistics so far this year for the mean reversion systems. Mean reversion typically trade more in volatile markets, bear markets, stuff like that. And as you know, we had that historic market rally from the late October lows until just recently. So essentially, you know, where you had a very low VIX volatility index, and the mean reversion systems just to get many trade opportunities. So for this year, we've had about 12 mean reversion trades for SPY and on 14 for ES futures. But looks like all these have been winning trades this year. So, and just taking the trades that I've been showing, you know, in SPY, and I'm doing a very conservative $10,000 or $20,000 per entry. You'd have made about $2,800. So here's the trades that closed out today. All the SPY systems are back in cash for the mean reversion. You can see these gains here, $340. Again, not huge gains off these $10,000 and $20,000 investments, but still more than enough to pay for a subscription to our service for, you know, several years. And of course, on MES futures, I mean, look at these gains. $2,000 on this second entry, CCI divergence, 630 on that. $1,600 on this system, $650 here. We still have these systems open, all right? And so these could definitely go on to make more should the market push higher. But I think collectively, if you just took all these trades of this year, you get paid for the subscription for 10 years over. Next, not going to look at all the individual statistics of these mean reversion systems, but here's the SPY CCI divergence system, mean reversion system. So this goes back to 1995, so quite the history, 1995 until current. So you have a profit factor of 251. What's a profit factor? It's essentially your gross profit divided by your gross loss. So that's a crazy profit factor, guys. I mean, look at that. $12,500 gross profit, $50 gross loss. That's why you got this insane profit target. You divide these into, that's where you get that number. 96.4% winning trades, 56 total trades. Here's your profit curve. This tends to be a short-term trade, only average of 4 to 5 days in trades. Okay, but very nice system. Here's another system. This is this. Oh, sorry about that, guys. I had the wrong slide there. So here's the statistics for another mean reversion system, the SPY trend pullback. So not as high a profit factor, 970, very respectable profit factor still. Profit factors of 2 and 3 are generally considered good. About 85% winning trades. A lot more trades, 207 trades. You can see nice profit curve. And this one holds a bit longer. Average trade time is about 7 to 8 days or so. Okay. Go ahead and move on. Again, congrats to any one of our subscribers who took those systems trades. Extremely profitable. We send out trade notifications for the entries and the exits. So you can, if you want it your handheld and follow it, that's what the systems are for. Anyway, back to the general market newsletter here. So here's the index sector table, what transpired today and this week. So you can see big gain in the market today. Dow is up 0.7%, but anywhere from 1.2 to 1.7% gain on the other indexes. Strong gains for the week here. A lot of these are up 2 to 2.5% or more. Big bounce back over the last couple of days. As far as the market sectors, we follow 21 sectors here. And you can see today only 2 sectors were down, materials and metals and mining. For the week, solid gains as well. Only those 2 sectors were down. Currency-wise, US dollar had a nice pullback today, down 0.4%. That helped the market. Cryptocurrencies, Bitcoin down slightly. It's up for the week, though. The stocks have bounced back nicely, especially CLSK, which I'll discuss, and Coinbase. Commodities, mostly to the upside here. The index, DBC, up 0.4%. Same for the week, actually. Crude oil bounced back today, up 1.8%. Natural gas, huge bounce, 17%. Holy cow. Big move there. I've had that as a long on our watch list via UNG, ETF, pullback in copper, ags, wheat was up. Precious metals were mixed. Gold was down a quarter, silver up a quarter. GDX, the miners, though, nice bounce back, up 1.6%, though down 3% for the week. And gold and silver down nicely for the week. As far as the bond market, slight pullback on the 10-year, 30-year treasury yields. Next. Item number 8 shows the economic news calendar. So tomorrow's Wednesday, and not a lot going on here. MBA mortgage, durable orders, crude inventories. And remember, guys, we're in earnings season, and that's going to affect the market here. So keep your eye on that. And let's discuss some of these earnings. A lot of big cap tech earnings. As you know, they move the market. So here's Meta. Meta's been downtrending slightly from the early October or early April highs. Here I added just a simple downtrend channel. It had lost its 50-day moving average here. Recovered it just slightly today, but otherwise it's still in the downtrend channel. This reports tomorrow, April 24th at the close. We'll see which way this goes. Is it priced to perfection? Or are they going to beat and go up again like they typically do? We'll see. Next. Driver 10, here's Google. Now they report on Thursday, April 25th, after the close. Google's the one that's held up. While the others were pulling back nicely, Google barely pulled back and was holding its 20-day moving average even. So it's still quite strong. Others to watch this week. Microsoft is on Thursday. That's a big one. It's pulled back into a little support zone, little shelf support zone here. Bounced off of it for now. But again, you have resistance now at these moving averages above the 9 EMA, the 50, the declining 50-day moving average, and the declining 20-day moving average. Your moving average ribbon is also now bearishly stacked. So now we'll see. Again, this is area of strong resistance, so we'll see how this reacts on earnings. Next, here's Amazon. Now this reports next week, next Tuesday, April 30th. And Amazon, or AMD, been in a nice correction here, fell through a demand zone, bounced off a support zone for now. You have the 200-day moving averages below and another demand zone. A little bounce here. This reports next week on April 30th as well. So keep an eye on those, folks. Let's go and move on to the index charts. First chart below, item number 14, is a daily snapshot of the 5 key major indexes. Again, as you know, we were quite oversold coming into this week. I discussed it on the weekend. We were riding those lower Bollinger Bands down on a lot of these indexes. Things were getting very stretched. And so far, we've had a nice 2-day rally back, basically to the 9 EMA on the S&P and NASDAQ. The Dow's was a little stronger. It's back to its middle Bollinger Band or 20-day moving average. Next, chart number 15, here's the Dow. Nice bounce. But again, now it's going to run into some moving average resistance up here, the declining 20 and 50-day moving averages. We had a nice divergent high here in March. Remember, the MACD had recycled back near zero. That was a pretty good divergence, which played out. I still favor some sort of lower high on these indexes, guys. Now, again, we'll see how far they go up. If they make a lower high, maybe 50% retracement or even more than that could occur on this bounce back. Next, chart number 16, here's the S&P. This is a weekly chart. It made a nice 3-week correction. So far, we closed right at their 20-week moving average last week, and we bounced off of it a little bit today. Moving average was pinching there. It's still bullishly stacked. Next, chart number 17, here's the daily chart of the S&P. Again, as you know, we had that tight coil back here in early April. Then we broke down, had a symmetry break, okay, and got quite oversold. We filled the gap here. There was a little support zone in here, demand zone, which we've bounced off of for now. Again, your big resistance above is the broken 50-day moving average now and declining 20-day. Okay, again, like I said, we were quite oversold. Not surprised to see a bounce. But because of the symmetry break here, I do favor odds for a lower high sometime, like a zigzag, kind of a lower high and then down again, and then maybe that's the better low. Again, we're in earnings season. I could be wrong. It could just magically recover. But because of the symmetry break, that's what I'm favoring at the moment. And chart number 18, here's my slide on symmetry, which I have a dedicated video on. But again, essentially, symmetry, guys, is a very powerful technique. You mark the trend that you're in, whether you're in an uptrend or a downtrend. You find it's a major inflection point. You measure the pullback points on the uptrend or downtrend. And then when you get a pullback larger than those, that's a break in symmetry. So on an uptrend, when you break symmetry, more often than not, you form a lower high. So because we broke symmetry on these indexes, I do favor some sort of lower high. Next. Chart number 19, here's SPXU. That's that triple inverse ETF for the S&P. Remember, I had this on our watch list over the last several weeks. It triggered breaking this candle in this channel in early April, and it had a nice trade. So I hope you took some profits. It's now pulling back. We'll also see if it finds some support on these moving averages down here, the 50-day, 20-day, just like on the S&P cash. Those areas are above as resistance. Next. Chart number 20, here's the KISS system. Again, the KISS system did a great job. It went in long in late October near the lows, rode that uptrend with trailing stops to protect those profits. It got out last week. All right, price pulled off. It's bounced back near, getting close to where it exited. Again, it's nowhere close to going back long yet, guys. Now, that said, it's going to depend what the market does here. If we do form a lower high, let's say we get up into here, then we form a lower high, my guess would be the system will then look to enter sometime in here after that next low. Okay. Now, if we just keep going up, right, then the system will go back long, probably a little bit higher than where it got out. But that's fine. The system has its rules. It's very good. Keeps you protected, keeps you in uptrends. Clear that out. Next, image number 21. Here's the 4 charts that we follow. Let me start that over. This image needed to be refreshed. So here's the 4 time frames of the S&P with our custom indicators. So again, you can see the nice bounce back we've had the last couple of days. On the daily here, the ATR is way up here. That's a resistance. The half day, the ATR is up here. You can see how, again, everything was stretched. You can see how wide the moving average ribbon was down there. You had a couple of the mark 13. So we were getting stretched. If we get a little bit higher, that's a resistance. On the 130-minute here, we've rallied right up to the ATR, so potential resistance once we go through it. On the shorter time frame, of course, we had a DeMark 9 at the lows, and we're above the ATR. Next, chart number 22. Here's a half-day chart. Again, nice pullback. Remember, we filled that open gap. We got into this first demand zone. We've bounced off of it, okay, and bounced around this 200 moving average. The moving average ribbon here, notice that was been a great guide during the uptrend. It is now bearishly stacked. So if we do get a little more bounce here, what we could see is the moving average pinch here and give you potentially an objective short for another move down. The lows did have some divergence there, so not surprised to see the bounce. Chart number 23, here's that 2-hour chart I was shown with the wave count. Again, for now, it still counts better maybe for that low to be a 3, and this is some sort of 4. Unless this goes too high, we'll just see how this flushes out. Chart number 24, here's a 60-minute chart. Remember, we had all these open gaps, which were magnets. These open gaps tend to be magnets on the cash indexes, guys. We had a nice MACD divergent low on the 60-minute chart. Rallied up. We essentially got a little resistance right here. The next big resistance, if we go through that, is right up here, as you can see. Next, chart number 25. Here's the 15-minute chart. So on the weekend, I showed a tight channel, and on this channel, you have 5 waves down. So that was another reason to expect some sort of bounce. On Monday, we bounced up. We stalled initially at the downtrend channel, and we have that labeled as a wave 1 and 2. Then we broke through the channel. So if you wanted confirmation and you waited for a break of the channel, still an excellent long entry, right? And we rallied up. You can kind of see a 1, 2, 3, 4 here, 5. We're up into a supply zone up here, resistance. All right, so we're stalling here a little bit, but if we can blow through this, there's a thin zone up here. So if we go through this resistance, your next price could easily melt up to this 5110 area. There's literally not much resistance here. Whenever you see just a solid candle like this, there's essentially no resistance here. It's kind of like thin air. So if we can get up through there, then I think S&P at least pushes up to this 5110 area. Next. Moving on, here's the triple Qs. Again, remember they had that tight coil, which busted down over a week ago. Moving average ribbon flipped to the downside. We broke symmetry. So I am looking for a lower high because we broke symmetry, but we'll see how far this goes. I mean, your big resistance, honestly, is now the declining 20, 50-day moving averages. Still quite a ways up here, and even around these lows at 432.70. Next. Chart number 27, here's SQQQ. That's the inverse ETF for the Qs. Remember, this is a long setup back in early April, and it had a nice trade. Hope you took some profits. Been pulling back the last couple of days. Chart number 28, here's the KISS system on the Qs. Again, did a great job going in long near the October lows, riding an uptrend. It exited last week. Price is bouncing back here a little bit, but the system is flat. Again, It's a system, so it'll go back long when it goes long. Image number 29. Here's the weekly chart. Remember, I've been showing this for quite a while. This nested 1-2, been postulating this is a wave 5 of 3. So we've got an initial decline here. Again, could that end 4? But to me, if this is really this bigger 4, it likely needs more time. But again, there's always different wave counts, guys. This is just one option. I think Steve favors maybe another pullback in the market than a rally up. This option would take a lot longer. So we'll see which one plays out. Next, chart 30. Here's the half day 195-minute chart for the Qs. Again, you can see the same coil bust down. We filled a gap. We also bounced off a little open gap from back in January. We've rallied back up into here again. So really not a lot of resistance on the Qs here until you get up to this 432-ish area up in here. Next, chart 31. Here's the 2-hour chart. Again, you can see the same coil. You can see price sold off, filled this gap. It didn't get down to this gap. If we do get another sell-off next time, maybe that's a target. But you can see how wide the moving average got here. Look at that. Whenever moving average ribbons get extremely wide like that, you can think of it as a mean reversion. It was due for a mean reversion bounce, and we've got that. So far, we have essentially one good wave up. Okay. Again, your other bigger resistance is kind of up in this area. Finally, chart 32. Here's a 15-minute chart of the Q. Shows that same channel I was showing with the S&P. Again, we broke the channel on Monday. Nice move up. Stalling a little bit in here. The next resistance is right up in here, so still a little ways up, like I said. Here I added some fibs, but really, we might have to adjust those fibs because if we're up in the morning, take out that high, then I'll have to adjust it until we get some sort of high here. Next, chart 33. Here's the 4 time frames. Again, just like in the S&P, nice bounce. Got a DeMark 9 on the 195-minute wide moving average ribbon, so nice bounce. ATR is your first big resistance. There's some resistance here on 130. Next, chart 34. Here's IWM small caps. Remember, they had an absolute textbook rising wedge with MACD divergence. True wedge patterns have divergence on the MACD. If you don't have a MACD divergence, then it's obvious. Then odds are you didn't draw a proper wedge, or it's not complete. Anyway, wedges are 5 ways, A, B, C, D, E. This was perfectly labeled. Broke down, got well into this demand zone near the 200-day moving average. And so far, nice bounce back. Chart 35. Last week, I put out these trade ideas. And on the weekend, IWM to me looked like it was really poised to bounce. Here you had a nice little wedge on a 2-hour into a support zone. You had MACD divergence, wide moving average ribbon, RSI divergence. Everything was set up. And so far, it's given a nice trade. Again, you have some resistance right up around this zone up here. Next. Chart 36. Here's the 60-minute chart. You can see it was a really pretty wedge with that MACD divergence, giving a nice trade. And chart 37, here's TNA, that's the leveraged version. You can see the same wedge. Here we had illustrated a possible inverse head and shoulder pattern, had price pulled back, but instead it rallied right through that resistance. So that's negated. I need to remove that. A nice trade. Hope you guys caught that. Next. Some other things. Here's Tesla. I meant to have this chart up with the other earnings chart. So Tesla had earnings today. As you know, it's been selling off for quite a while. Was quite deeply oversold. So I'm not surprised it positively reacted to earnings tonight. Chart 39, here's Tesla on the weekly. We lost this demand zone. There's a big support zone around the 110, 120 area, but for now we are bouncing from the earnings after hours. Chart 40, here's NVIDIA. NVIDIA, as you know, sold off, lost that 50-day moving average in a big way last week, but closed right around that 38% fib. So we're seeing a bounce back. But again, these moving averages up here are now resistance. Now, the earnings for NVIDIA aren't until way in May sometime, so they're not anytime close. Next, moving on to some of these indicators. Here's the VIX. So the VIX had closed back inside its Bollinger Bands, and that was a buy signal. And you can see the VIX has been melting down here. So that's helped the market. Chart 42, here's these McClellan oscillators. Remember on the weekend video newsletter, I pointed out how the NAMO and NIMO, they were well below the lower Bollinger Bands, but started to curl up. You had a positive divergence that had set up here with respect to price, and now we see that playing out. Chart 43, here's the NYSI 9EMA crossover system. This gave an objective short signal in early April when it crossed the 9EMA here and confirmed. Again, I know quite a few people that took that trade. Now we are bouncing back. That's, this isn't anywhere close to closing out. You can see how the NYSI is still very far away from its 9EMA. Again, you have to decide if you stay in the trade until this actually crosses back for a buy, or you take some profits when you get extremely oversold. But it did give a nice trade. Chart 44, here's the percentage of stocks in the S&P 500 that are traded above their 20-day EMA. Remember, this was an overbought territory in late March, so nice correction. Got quite oversold here, and we've had a nice move up. But kind of like I discussed on the weekend, a lot of these good lows have been like these 1-2s, where you get a low, it bounces back, and then it comes down again. You can see all these. You can see here in October, nice low, then it rallied way up to the 50% area, came all the way down, and that was your better divergence. So do we have a low in the markets, or are we going to see some behavior like that again, where this comes down again? Then that's our better low, and then the market goes up. If symmetry plays out and we get a lower high and come down again, then that's likely what's to occur. Next, moving on to the bond market, here's high yield corporate. That rising wedge, as you know, played out, but it's bounced nicely off this little support zone so far. Now the moving average ribbon is starting to pinch on the other side, so you want to keep an eye on that. Chart 46, there's the 10-year treasury yield pulling back, still holding that 9 EMA, otherwise it's still in the upward channel. Chart 47, here's TLT 20-year bonds. Again, they move opposite the rate, so you have the opposite channel. It's a downward channel instead of an upward channel. And on TLT here, I like when this happens on technical analysis. You have the 61.8 fib perfectly matching that channel retest where it found support. So it's an important area. Finally, looking at the yield curve, again, this has been inverted for over 500 days now. It has been slowly inching up. It was up a little bit today, up about 0.75%. What will be important is whenever this goes back above zero, non-inverted, that's typically when you get your recessions. And I do think a recession is inevitable, despite what Jim Cramer would say, or CNBC, or Biden, or whatever. So here's a slide I showed on a weekend from Game of Trades. It goes back to the 1920s. And again, things can always work out different. History never repeats exactly, but we've been inverted for over 500 days. And the last few times in history that has occurred has been the 2007-8 time frame, 1973-74, 1927-29. All those had at least 50% haircuts in the markets. Now, are we due for that eventually or not? Tough to say. Not going to go into that tonight, but I do think we are going to have a recession, and maybe that'll coincide with the next, bear market in the future. Next, look at a few of these sectors. Here's XOK technology. Again, this had a heck of a sell-off from that descending triangle pattern. So far, bouncing a little bit off this 38% fib. Still below its 9 EMA. A lot of resistance here. This does not look bottom to me. Maybe it gets a lower high here and then comes down again. Chart 51, here's XOC communication sector. Some of those FANG stocks are reporting, so you want to watch this. It'll bounce back this week. Chart 52, financials, also bouncing back nicely. Now, they started bouncing last week when the market was still declining. Chart 53, XLI industrials, also bouncing back the last couple days. 20-day moving average is just above. Moving average ribbon is pinching on the underside. Chart 54, biotech. I put this, it's been a nice downtrend, but I put it out last week as a low risk long off this 200-day moving average, and so far it's bounced off here a little bit, given a trade. Chart 55, real estate. Even this has bounced back a little bit, but it's still below its 200-day moving average. Chart 56, energy, XLE, bouncing back the last couple days. And chart number 57, oil services. Remember, this had pulled all the way back to these major moving averages, 50-day, 200-day moving average. I talked about that on the weekend. Looked like a lower risk area to go long, and so far it's bounced. Next, moving on to the newsletter, here's the US dollar, which was down 0.4% today. It's up a little bit here after hours, but so far stalled a little bit of that resistance. Chart number 59, here's the Japanese yen, this descending triangle pattern. Remember, this broke down a few weeks ago, still working lower. Cryptocurrencies, here's Bitcoin, bounced off the support. Now we'll see what this does. And chart number 61, another Bitcoin chart. Again, nice bounce off the support. But again, this is an important support here, guys, right around this, 59,000-ish area. Right here, you got a big thin zone. This uptrend here, there's no support. So if it were to ever to come down again and lose this, then you got a big air pocket here. But for now, we bounced off of that. Some of the crypto stocks, here's Coinbase, Kathy Woods. Will bounce back the last couple of days. There are some resistance up in here, though. Now, the star, quite honestly, has been CLSK. They have actually pretty decent fundamentals. Get a nice tight setup here, and this is at a very nice percentage move out of this pattern. Next, moving to commodities, here's DBC, the index, up 0.43% this week. Remember, it's still in this big old coil longer term. Chart number 65, here's crude oil. Remember, recently pulled back off that supply zone, but it's bouncing off an uptrend channel line and 50-day moving average here. Chart number 66, there's the proxy USO tradable ETF, same pattern. Chart number 67, UNG, natural gas. Remember, I've been showing this falling wedge pattern. Nice rally off the bottom of the wedge. I showed this last week. Nice trade so far. Now we'll see if it can break out of the wedge. It's certainly quite oversold. Here's chart number 68, the monthly chart. Again, like I said, it's quite oversold long term. Natural gas has been down around this 35, this 30-year support going back to 1995. On the opposite end, here's cold. That's the inverse ultra ETF for natural gas. It was in a tight coil that I've been showing, and this broke the coil to the downside for a short. Chart number 70, here's copper. So far, it's down 1.4% this week, but nice move out of that big coil. Chart number 71, DBA, agriculture, pulling back here. It's had one hell of a move from those January lows where we were bullish. So make sure you're protecting your profits with some stops. You can check the KISS system, see where it has a stop. In fact, let's take a look at that. Remember, guys, on the KISS systems, find that window again, you can simply just type it in here. So here's DBA on the KISS systems. This system went long on January 24th, trades up 21%, and it's currently suggesting a stop at 25.30. Let's take a look at that chart. Here's the chart on the KISS system. It went long right here. Pretty damn good entry. It's raised its stop. Its current stop is 25.30. So that's important, guys. If you're long this, 25.30 be right here, just around a little below this 20-day moving average. That's a logical place for a stop. You do have some divergence here building, so be aware. Chart number 72, there's the weekly chart. Just an absolute textbook, picture perfect cup and handle that I marked back in January. Played out perfectly. Chart number 73, there's the monthly chart. I showed this on the weekend. I'm showing this because it's also struggling here around this supply zone. The supply zone goes all the way back to 2014, so not surprised. But long term, it's in an uptrend. Moving to precious metals, gold, it's down about 3% this week so far. Not surprised. We were expecting a pullback on that. Here's the daily. What I don't know, guys, was that the high there for now is a wave C, or was that a wave 3 and we're in a wave 4 pullback? There's no MACD divergence here, so we'll see which one plays out here. I'm not completely sure. Chart number 76, there's GLD. Remember, we counted this as more of a completed wave count back here. We were looking for a lower high, and we certainly got it. But again, We'll see what that does. And remember, guys, long term, I'm just, if a high is in gold, I'm just looking for that to be an intermediate high. Long term, I expect it to go much higher. I expect, to me, it broke out of a major cup and handle, a wave 3 of some sort. I think this sucker could go to 3,000 over time. Driver 78, here's silver, nice pullback as well. Again, this area down here, this previous resistance, is now support. So if you sold silver up in here, this is an area you could have started scaling back a little bit. Driver 79, here's the weekly. Again, absolute textbook 5-wave coil pattern. You got a major breakout. Yes, it got overbought here, but to me, guys, as I've always told you, pullbacks in this are buying opportunities, especially if you're a longer term holder. Driver 80, here's the monthly chart. Absolute picture perfect triangle pattern. Breaking out of there. It is off the highs, but I am expecting over time this thing could rally up into the 40s and 50s. Now, we were expecting a pullback in silver. So at the time, I'd put out this trade ZSL. That's the Ultra Inverse ETF for silver. And you really needed to be long this coming into this week, but it gave a nice trade. Gapped out of this pattern on Monday. So hope some of you guys had that. I went in and took profits myself. Some of these silver stocks, here's one I've been mentioning. AG Silver had this perfect falling wedge, broke out about a month ago. It's pulled back. So if you took profits on that area, honestly, this pullback area, maybe not a bad area to start rescaling back into it. And Driver 83, here's the daily. Again, it's had a nice pullback the last couple weeks. So it may not be bottom, but if you had sold up here, maybe not a bad area to have bought some. Moving on to the GDX, the ETF. Again, GDX basically pulled back off that 2023 high, but I am looking for it to find some support in here over time. Chart 85, here's GDX in the daily. Again, we had an excellent buy signal back there on that March 1st break of that channel. It was very objective, a lot of triggers. Confirm that. We've pulled back to this area, which is now potentially support. For now, we have a 3-wave pullback. Driver 86, here's GDX in the 2 hour. Steve showed this last night. Here, if this is an ABC, this would be a perfect 1-to-1 symmetry. But as he states here, it doesn't have to be. C could be shorter than A. We'll see what this fleshes out into. And the final one, BPGDM, our GDX trading system based on this Renko chart. Gave an excellent buy there on March 1st. It has still been an overbought territory. It has not given a sell signal yet. All right, guys, moving on to trade ideas. Just following up here, FNGD. This gave a great trade on the inverse ETF for the FANG stocks out of this base. But, if you didn't take some profits last week, it's pulled back. It's now retesting the channel. We'll see if it finds support there or just dips back into it. Driver 89, here's Adobe. This is at a nice correction. You got a nice little falling wedge here with some MACD divergence. This looks like an interesting long. Notice your double divergence on the RSI. Driver 90, here's LPG. Idea from Steve. Nice little pattern here. Resistance is 42.30. Driver 91, FUTU. Here's an interesting chart. It's a weekly chart. Really nice long base forming, big coil. A break out of here, this thing could really run. But I suggest, and there's been discussion on the trading community, on these weekly time frames, dig into the fundamentals a bit. I'm just showing the chart here. I haven't done that, but if you see a setup here that you might be able to hold for months at a time, you may want to dig into the fundamentals. Here's some new setups, AQST. Nice little kind of rounded cup here. Resistance is 454. And chart number 93, the final chart, SPG. Here's a potential short. Support is this 139.50. But if it bounces higher here, you may be able to get an objective short around these moving averages with a tight stop. On a breakdown of support, my target would be down around this range. All right, guys, that does it. Quick check on futures here. ES futures are up about 14 points this evening, so we've seen some follow through. And gold is down about 7 points. So we'll see what happens tomorrow, guys. Have a wonderful evening. Thanks for all your support. And if you're on YouTube only, consider subscribing to us. That helps us out. Take care.